I'm Wendy Moran, a shareholder at MHCS. I have previously vlogged about the financial reporting framework for small and medium-sized entities, or the FRF for SMEs accounting framework, and what this framework is and who can use it. In this follow-up vlog, I will discuss how the FRE for SME framework differs from GAAP. Under the FRF for SME framework, there is a policy election to account for income taxes, using either the tax payable method or the deferred income tax method. The deferred income tax method is required under GAAP, so no option to select. There is no concept of comprehensive income under the alternative method. A subsidiary is defined as ownership of more than 50% of another entity under the FRF for SME. GAAP has the variable interest entity model, which is much more complex. Investments are accounted for at historical cost, and only investments held for sale are recorded at market value under the alternative framework. The FRF for SME has no concept of impairment for long-lived assets. All of these are amortized over a life and written off when no longer used. Leases follow the existing lease accounting, no changes for the new GAAP guidance that's effective for 2021, and that will have an impact on companies' covenants if under GAAP. Goodwill is amortized over 15 years instead of 10 years or less for private companies under GAAP, with no impairment testing. No derivative or hedge accounting. Recognition is done upon settlement, more on a cash basis under the alternative framework. Revenue is recognized when performance is achieved and collection is reasonably assured. This follows the basis in existing GAAP and no changes for the new uncomplex guidance that's effective for 2019 under GAAP requirements. How was the development of the FRF for SME framework different than that of other non-GAAP basis frameworks, like cash basis or tax basis, for example? Well, the FRF for SME framework was developed by CPAs across the U.S. as part of the AICPA's task force. They consider the needs of users like management, banks, and bonding companies. This method was subject to professional scrutiny and public input, which differs from cash basis or tax basis methods. You may want to discuss the FRF for SME framework with your accounting firm or us here at MHCS, as well as the users of your financial statements, to see if this alternative framework may be acceptable or even preferable to the users and internal users of the financial statements. Thank you.